Hi, this is my sixth cash flow question, Danuk PLC. Total sales and purchases were made on credit basis. So total sales in income statement is 25,000 and as a closing date SOFP present. Debtors closing balance 1,400. So which means still receivables 1,400 as a closing date. Total sales 25,000, still receivables 1,400. So which means you received 23,600 altogether in cash within the year in operating activities. And first of all, you have to find out purchases. So cost of sales given 14,000 and closing stock 900. So both together, your total purchases that you made in current year 14,900 and that total purchases you made on credit. And in the SOFP, it says closing balance of the creditors 990. So which means you paid in cash for the creditors 13,910. So that's both debtors, receipts, and creditor payments you have to record in operating activities. Other income represents rent income. So other income in the income statement is given 1,200. From that, still receivable 300. So which means you received 900 from the rent income. And other expenses represent employee compensation. So that total 750 you have to recording operating expenses as cash outflow. And here the rent income received you have to record in investment activities. Next one, finance expense includes 40,000 bank charges. So that bank charges you have to record in operating activities as cash outflow. So in finance expenses in the income statement 900. Minus 40, the interest expense that relevant for the year is 860. From that, you have to find out the amount that you paid. So in the income statement, it says interest expense that payable 120. So which means you paid for the interest expense 740. That you have to record in operating activities as well. Next one, the share issue and the dividend payment that mentioned in their statement of changes equity. These both you have to record in financing activities. So share issue you have to consider as cash inflow, and the dividend payment you have to record as cash outflow in financing activities. And it's given the property plant and equipment chart. So here it's given land, building, and motor vehicle purchased amount. So these all property plant and equipment were purchased on this year because there is no any opening balances. So these three land purchases, building purchases, motor vehicle purchases, you have to record in investing activities as cash outflow, right? And the depreciation given building 400 and motor vehicle 600. So building depreciation 400 you have to consider under administration expenses, and the motor vehicle depreciation you have to consider under distribution expenses. And when it comes to the administration expenses, it says the total administration expense for the year 3,400. From that, there is still payable as a closing date 230, and the depreciation is 400. So which means the amount that you paid for the administration expenses is 2,770. And when it comes to distribution expenses in the incomes in the SOFP, it says there is more, you paid more that relevant for the next year, prepaid 150. And the total distribution expense for the year 2,750. So from both together, there is a depreciation 600 not on cash flow. So you have to subtract that. Then you can find out the amount that you paid for the distribution expenses in cash 2,300. So both administration expenses paid in cash and the distribution expenses paid in cash, you have to record under operating activities as cash outflows. And the last one, the same question you can prepare based on indirect method. So here I am only discussing the indirect method operating activities because in the indirect method, direct method, the investing activities and the finance activities are the same way that you are preparing, right? So in the indirect method, the base for the indirect method is profit before tax is given in the income statement. And here you have to add the PP depreciation because it's a non-cash flow activity. And but this PP depreciation we consider as an expense and it's already deducted from here too. So to reverse that entry, you have to add PP depreciation back. And the interest expense, there's a specific space here, the interest paid that you have to minus. But interest expense is an expense, so it's already deducted when you're finding the profit before tax. So that's why you are adding back here interest expense that were earned for the year, and then you have to subtract at the bottom the interest paid in cash. Yes, and the rent income is also rent income is investing activity, but it already added when you're finding the profit before tax. So you have to minus the total rent income from here, and then you have to find out the rent income that actually received in cash, and then recording the investing activities. And when it comes to the working capital changes, here the same way as we discussed in the question number 5. These all are inflows because there is no any opening balances. So when the increase that happens to the current assets, you have to consider that as cash outflow. And when it comes to the current liability increasements, you have to consider that as cash inflow. So that's how you are preparing operating cash flow in the indirect method for this question. So we will meet from the other question as well. So please do share, do comment, and do purchase actually. Thank you.